Alright, so today we're going to be looking at some ATM model examples. This is the framework that was covered last week in a separate video, so if you haven't watched that, I suggest you go and do that first. But pretty standard, hour drawn liquidity, 15-minute point of interest, 5-minute change in state in a 1-minute market maker model. Got a couple examples from the past week from the live streams, some of them using demo, some of them just are covered in a framework, and I executed it on another screen. So hopefully by watching this video, you'll gain some insight of what I'm anticipating and expecting throughout the New York session. And you'll find that these models are pretty consistent throughout the week. At least 2 to 3 high quality setups form, and some of them even happen every single day. So if you enjoy this type of video, leave a like and we'll get straight into it. Sweeps this side, comes up, takes out the London high and previous day PM session high. Then trades back down, and here's your Judas swing up here. So really just gotta wait till 9:45, I think, because there's not enough data for me to be confident of where we're going yet. Still favoring the buy side because that's the hourly draw. We do have this inversion gap on the 1 minute. Candle buy is holding the 5-minute order block like I wanted to see, and we're on the short term 1 minute chart. We just broke above this short-term high, which is an intermediate term high on the 30-second chart, dipped down into the bullish order block, holding the wick. It's a good sign. We have a change in state on the 1 minute as well, closing above this bullish order block, bearish order block, now becoming bullish order block, and we're holding it for the most part there. Probability, but nice reaction there off the bullish order block on the 1 minute. Gonna be looking for buy side liquidity pools in premium, which this to me is a pretty obvious swing high. If we can put that high in at around 10 o'clock, that'd be preferred. By here, low put in at 8:30 as we take internal range sell side, and we want a high put in between 9:30 and 10. Well, this high is lower than this one, so I would assume if we want to spool quickly, we want to see it reach above here at a minimum. Fair value gap right here. Another opportunity to get in. So when we see something like this 15-minute gap here traded into, plus we have an internal range liquidity sweep at 8:30, plus we have a higher time frame narrative of our bullish prices above this 4-hour, 1-hour buy side liquidity pool, plus we have news, so we can assume the news profile, all that stuff in line shows you that there's a high probability that it's going to be a Judas swing like this, and sign some sort of a market maker model or a 2022 model up to the buy side liquidity pool, at least above this 902 high. 951, by the way, ran into this BISI, so that's a valid macro entry, I think. If you want to look, we're going long, more than 20-point opportunity. Now, once we hit 10 a.m. and if we run this buy side out, we could see a reversal down into 8:30 low potentially. Remember, that kind of time window we're looking at in the AM session when we have 8:30 news is between 8:30 and 10 o'clock. Then you have maybe some choppy poor price action between silver bullet hour, early in silver bullet hour as the steam runs out, and then later in silver bullet hour we see potential setups at 10:30 or 10:50. Getting closer. Now, if it just taps this, okay, that like that. There's our high, so that's our qualification for the entire thing. We don't need it to run anymore. Still got what, 5 minutes left. What is that? There we go. Another bag and tag 950. Easy stuff, right? It's like that's your bread and butter setup right there. And how are we able to come to that conclusion? We'll do a full analysis, but hopefully that made a whole lot of sense. So let's start at the hourly. It's always going to be top down. So when I come to the chart, 9 o'clock, 9:20, pulling up the hourly, okay? Where is the hourly candle likely to expand? Well, took out sell side, we have a weekly profile where it indicates we're likely to reach above this high and more. I know we're not going to just pop that high and stop. Where, you could take your fib measurements if you want and start doing target measurements of one standard deviation above, but don't really care a whole lot about that. So, okay, we have a bullish bias. Now, the most fundamental part that you need to remember is if we have a bullish bias, if we have a bearish bias, sometime during the day, either during London session, either during New York session, there has to be an opposing liquidity pool sweep, and that could be at specific times. So for us with the ATM model, we're going to be looking at 8:30, 9:30, or 10 o'clock to create that other side of sweep. So if we have bullish bias, we're expected to run above this high. We want to see a sell side liquidity pool sweep, either at London or at 8:30, because we have 8:30 news. Drop on the 50-minute chart. Does London do anything much? No, we don't really see a sweep of sell stops in here. Then it drops down here, drops down one more time at 8:30 and pops above. Okay, so now what we're looking at is we have 15-minute liquidity sweep. We could be long at 9:30, having a stop below here, or we could just be waiting for some sort of reaction off of this at 9:30. So now this gap that's on the 15, I'm assuming, okay, since it's a 15-minute gap, we need a 1-minute MMBM in this case. Okay, we can disregard this. Now, okay, we see all that stuff. All we need to see is a 2022 model. Now we just use our 2022. Okay, we just need a sell side run potentially, but we already got it. And then a market structure shift, fair value gap, long into buy side. Now, as you take that all in with the different stuff we're looking at, now we go, okay, where's our 5-minute stuff that we shouldn't cross? Well, I marked out this order block right at 9:30, right? Because as we open here at 9:30, we don't have any PD rays really below it. There's no gaps I'm watching besides this inversion gap on the 15. And I'm watching this order block. So we can wick below it like we did here and close below it kind of inside on the 1-minute chart. But you can see here, we're just filling a inversion fair value gap. So we hold the bullish order block on the 5-minute chart. We hold the bullish fair value gap on the 1-minute chart. And then what do you see as a result? A 2022 model. Trades up. This is a 30-second intermediate term high. Trades above the order block, closes above. You could be using this as an entry point. Order block tap with the tiny gap there. If you're not comfortable with that, then you just wait. Okay, where's our obvious breaker and where's our obvious kind of unicorn 2022 model? Well, there's a swing high right here. You could be using this as your swing high, right? Then what do you see as a result? Well, we have a low, high, lower low that fills a gap. So that's your kind of turtle soup profile. Then what do you have as a result? Well, we have this. All of these candles is your bullish breaker, but I'm gonna just pull it from this one because that's the one that's gonna be most reactionary. Pull this across. Whereas our unicorn setup is gonna be a fair value gap that's paired on top of a breaker. And then this gap lines up perfectly. And then we use what time to enter, right? Macro time magically lines up with all that stuff. And then right here at 9:50, dips into the fair value gap and then flies up into the high and into the high that I wanted to see pierced by 10 o'clock. And there's your high being put in. So it's like a well-oiled machine. All that stuff kind of merges together at the same time. And then we're able to find a bias and find a trade setup just by using, I guess it's not simple stuff, but you need to understand what you're looking for. And it has to be top down. So taking a look at NQ here this morning, sent out the daily bias. A little skeptical on the bullish movement now, but kind of a harder daily bias just because we had a gap here. So at both the buy side and sell side prior to 8:30. And I was favoring some upside here just because we had created a short-term low off of this sell side purge, low here and low here. And for the most part, up to 9:30, we were holding this bullish order block, which would have been the breaker. So I was monitoring that. I like the fact that we had a gap down here. So this purge to me was a bullish indication. And if we wanted to reach up for this buy, so that was what I was favoring. But as we break below this bullish breaker, this fair value gap, and the inversion fair value gap over here, it's already more than 3 PD rays. So I'm watching to see if we want to continue downside, which I assume will be this sell side target in the gap below us. Well, that's why I wanted to see, kind of wait for 9:30. It was not as obvious to me what 9:30 wanted to do. We started that run up, but then we just filled a 1-minute gap right from the 850 macro. So does this look bearish to you? I wouldn't argue so. We're closing above a order block with fair value. It's a high probability order block. If we break above this, which looks like we're going to, let's say, market structure shift above a intermediate term high. So look at the ES low not being taken out as SMT between here, bullish SMT. You could anticipate these gaps being used as inversion, but I've already bounced back and forth between biases twice. So that in my head, that's already indicating it's a difficult read for me. Gap in here, market structure shift below. So that's your 2022 model, I guess, right? Right in there. If this candle closes green, which it should, I find it extremely hard to see it to reverse all the way down here. Then look at that as a 1 minute market maker buy model. Reacting off of a higher time frame level, we have a instant candle closure. This is your Cameron's model, I guess, in a higher time frame rate. And then 1 minute market maker buy model up to the 930 relatively equal highs. But I mean, if you look at this right now, is there really any entry to go long besides here? I wouldn't think so. I actually missed this completely, but I would have taken that as a long. Keep flipping back and forth. This should be treated as inversion. Same thing with this. But no high probability shorting opportunity. Or here's another gap. I would feel comfortable going long in here. Stop below the order block, but you can see this heightened volatility, right? We got the inversion gap. We got this BISI. We also have a technically an inversion breaker in here, premium end. You can draw all of these points out. 1 minute for value gap. So nice trade up here. Slowly reaching up into the 20 points, which I think, yeah, it's 20. Candlelight is holding this lower one. Whenever we have two paired like this and you're entering on the first one, preferably wicks are going to close in the bottom one and candlelight should all close within here. So this is a little coloring outside the lines, but we're allowing for that. There's your first partial taken at 20 points. Can move stop up a little bit here to this breakaway gap. There still is buy side if we want to reach all the way up there. Look at 18,425 on the NQ hourly chart. And stopped out on the second contract at break even. Now I do think it still will reach up there, but another inversion for value gap. Better move this one actually. One in here, and in here. Now watch how this candle swept the low and closed back above. That's an indication of a reversal, right? This candle here, we close below the sell side. Same thing with this. Traces back down, sweeps it, taps into, I guess, the latter, very last portion of this BISI here. Now let's see. After we see the reaction here, and we start accelerating up, that first rally that's formed, I'm looking at that as a breakaway. So you could jam your stop there, which is what I did as we moved it back up after taking partials. Doesn't ever reach that actually. And then we trade all the way up, completing the market maker buy model as we left relative equal highs here at 930, here and here. And it was also not present on, yes, we didn't see a sweep. There was no SMT up here. And we reach now for the buy side, and there you go. There's your full market maker buy model. That would be your second partial. Let me just took out the internal range buy side, swept it, closed all the way back below. So realistically, we should not reach back into this imbalance. I like to see its speed as we reach down for the PM session low. So now I'm anticipating as the sweep of sell side right at 930. I want that to come and just burn all the way through all the sell side. Trading to a 15-minute gap. I've outlined here. And then as we trade into the 15-minute gap, I'm watching this candle here. And then we're using the Cameron's model of it as it trades into a higher time frame gap or a higher time frame swing high or swing low, swing point. We want to see that next candle print to be a down closing candle. So this one prints into the gap, fills it. This one prints below. So I'm looking in this next candle that prints for an imbalance, which would be in here. Fills the imbalance, takes out another swing high, and then same exact kind of fractal in here too, right? You could be looking for a 1 minute market maker model on a 15-minute PD array. So preferably I do want to see this order block here hold as we continue to the downside using the really like the 920 to 940 macro. And the basis for that macro is there's a macro between 820 and 840 using the 830 news. So I assume there's definitely one, and I've seen it before multiple times of different people who've talked about it. This 920 to 940-ish macro. I mean, it's just really just using the 930 volatility. And nice sell off there. Wanted to reach down into PM session low. There's our first partial. Moving stop to break even. I wanted to run just a little bit further into 409, if that's possible. There we go. Thank you. And I mean, that's the day, right? That's the whole business done and dusted. Pretty simple stuff. I mean, you're really only looking at a couple time frames in the morning. It's going to be your 920 to 940-ish macro time. I'm really just using the 930 volatility. I'm going to be using 950 macro and maybe the 1030 or 1030 or 1050. It depends on the day, because if there's a day where you're anticipating 1030 below probability, give it the maybe 830 news, you don't want to be trading around 1030. 1050, it really just depends on the day. But optimally, you're going to be using 930 volatility and 950. And if we'll do top down. If you take a look at the hourly chart, right? So weekly profile is Tuesday, classic expansion. We have a Wednesday reversal occasionally, or a Thursday reversal. So every morning I'm checking Forex Factory, looking at the news. So today we have no news, and tomorrow we have 830. So that typically produces not low probability conditions, but difficult conditions today. So I'm going to be careful of that. I'm already basically done for the day with that 930 market maker sell model. Yeah, right now I did. Super clean. But if you look at the daily bias, we have obviously this high piercing the external range buy side. And if you look at our 3-day look back to 1, 2, 3, we're pretty bullish from our 3-day look back. We're trading to this gap here. And then if you look at our, look at this fractal in here, right? Swing high, higher swing high, lower swing high. So that right there is your long-term high or intermediate term high as we fill the gap. So as price is doing that on the hourly chart, look at our 15-minute chart. So keep that in mind. We have a swing high, higher swing high, lower swing high, or even in here, right? This becomes kind of your long-term high. We're bearish on the 3-day look back. We're bearish using this, as well as London session clearing out the buy stops from Asian in previous day PM session. Came up here, filled this gap, came down, filled another gap. So that's why I was able to pull the bias to the south side, looking at this BISI, looking at this south side pool. We have a SIBI here. Extend that out. We have just selling through there while we're dipping all the way through. Use it as a bear short block there. And there's your sell side run. So if you're able to capture that entire thing, what is that? 120, 100-ish points.